Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a great day. Let's take another look once more at SUI, see what's going on. Good news is all this liquidation on the downside has been fully swept, minus I'm sure some late longs. And for the most part, I don't want to use the word the bottom is in, but it does feel like we're reaching a tentative bottom. And the main reason why isn't because of the charts. It's just based on the larger time frame. We can recognize that we spent a decent amount of time between 160 and the 230 mark, back from September to November before things broke out pretty big. So just know we're probably going to be stuck in this range here. If we don't close above this 230, 240 mark here soon, we're going to probably spend a lot more time underneath that range. A lot of it hinges on Bitcoin though, because SUI, as strong as a coin as it is, it's been pulling back just as hard, if not harder, than Bitcoin has, and hasn't really been recovering all that strong. So not a good sign, but we're going to look for some things that kind of may tell us if there's a shift in momentum or potentially kind of that dynamic shift. But by no means am I going to tell you what you want to hear. It's not what I do. So I'm sorry in advance if I hurt your feelings by, telling you your favorite coin may continue lower if that is the case, right? It's just abstract. You look at the charts with no emotion and you're going to be a lot better off. Speaking of emotion, it really helps my emotions if you hit the like button, comment below if you get a chance. Love to hear from you. Just helps grow the channel a little bit more. Unfortunately, we get like less than 5% of the people that like the videos to those who actually watch them. So yeah, I appreciate you doing that. It really helps us out here a lot. And what I mean by us is myself and my community. We have a really awesome group. CryptoCash.tech is a site, a link down below if you want to consider becoming a better trader. Quick little heads up. Thanks again for the awesome feedback here too. We are having some phenomenal results here. Our Plus bot is killing it right now. We're up 610 on $50 per trade in the last 40 days. It's still a strategy that we're perfecting, but it's working very well with this manipulation of the market. So the truth is you just can't hold trades open for very long nowadays. They got to be quick in, quick out. That's why I always tell you to secure profits when you can. So future reference. It's important not to hold everything to the metaphorical moon because, I think moon plays right now are just not even a thing. I don't think they will be for a very long time. So let's take a look here at SUI. I cover Solana daily. Very similar price action, which is just terrible into the downside. But the cool thing is all the liquidation has been swept minus some late longs here at 190. So we got some high leverage longs at 190, but for the most part, macro perspective here, totally rinsed out. In other words, any leveraged long between $2 and $3 is completely destroyed. So as I've mentioned previously, don't take high leverage trades of this coin because you're just going to be another statistic. Even if you're taking one of the upside right now and you're in profit and you're like rolling your eyes that this guy online is telling you shouldn't take a long position. The truth is you're probably going to get destroyed here soon. So sell while you're in profit. That's just kind of how it goes right now. Okay. Adjust your stop loss higher. That's what I tell my community. Liquidation delta is still pretty high to the downside. So no matter how awesome the charts look today, we seem to have amnesia when we have one good day followed by like 50 terrible days. The truth is we have more people shorting this coin than taking longs. So what do you do with that? You don't take a long into that. That's like walking into oncoming traffic. You're better off running with the traffic than going against it. Okay, it's a terrible analogy. I got to find other ones, but for now, it gets the point across. We are below a significant amount of open interest. Majority of the open interest is 240, 260, and 280 plus. So we're not close to that yet, but just know 240 will be our next key level of resistance, which is based on that being a pretty strong support range. 240, 243, that was the previous dollar cost average target that I recommended. That's an area that there was a lot of confluence, and we can see until we get above that, it's going to continue to work as a resistance. The chart will reflect that too here. So I'll show you here in a minute what I mean by that. I'll update our fib levels here soon, but there's no real point in doing so right now. Even if I give you macro fibs, it's just going to be a consolation or like a placebo for you. Keep in mind, folks, there's some people that put way too much emphasis on fib levels. They literally do all their TA and charting on it, and it's a terrible way to go. It's literally just something that helps you feel better about yourself by trying to anticipate where things are going to go. No discredit to fib levels. They're very consistent and very beneficial, but it's not all you use in trading. And if that's the case, then whatever works best for you. But the key takeaway here is I use fib levels daily. I'm just not going to have them on the charts right now because I'll send a playout chart here soon to reflect that. And if you take a look here, you can also see, fib levels, of course, but more importantly, I provide playout charts on our Twitter, Telegram, and Discord, giving you insight on things I cover here. So be sure to check that out. Daily time frame, we're underneath all moving averages, the 20 days specifically. We can see a lot of confluence at 280. So if we just so happen to rally back to 280, that'd be a perfect place to consider a short, or more importantly, just securing profits, because we're probably going to see some resistance at that range. And what I mean by that is we have our local point of control at 283. We've got an obvious bottom that we found here for about 5 or 6 days before it dropped out. And then we also see the moving averages hanging out right there too. So it just means that you're going to have a lot of trouble trying to go, break through that, or this coin will have trouble breaking through that the first time, maybe even the second or third. All that being said, we're still under 50 on the RSI. We are, MACD is trying to converge, but hasn't yet. Stochastic's swinging up a little bit, but these are all consolations, folks. So again, if you're taking a long right now, I'm not discrediting you by doing that, because Bitcoin is breaking through its tentative resistance at 82,000. We're probably going to see a bit of a run here, but I don't think it's going to be monumental. We're still in a descending trend until we break that trend. Long positions are just higher risk and less recommended. We can see we're below all moving averages in the 4-hour. The general rule of thumb is to at the very least be above the 20-day SMA, kind of letting us know over the last 24-hour candles, we have shifted that descending trend. That's essentially what we're looking for. We're not there yet. We want to be over 50 on the RSI 2 here. Don't see that. My personal thoughts is that a short in the 240 to 260 range seems sensible at this point, because I think we're going to see some resistance at 84 to 86K for Bitcoin. There's a CME gap. There's a lot of things that in that range there that once filled, we'll probably see the price pull back. So that leads into that. So between now and then, it doesn't mean the price is going to drop for this coin. It just implies that we're going to see some resistance in the 240 to 260 range, and I'll show you here in a minute why I think that. MACD is converging, great. One consolation in a sea of red. You don't take a trade in that direction because of that. The one thing you can see here, we do have a microstructure shift. You can kind of see this on the charts. If you can see this guy here, it says MSS. It's basically a microstructure shift. So essentially telling us that we've broken through our local high here, and hypothetically the price will continue higher because of that. That's a shift in momentum. That's a good thing. We want that. But if that doesn't have other confirming factors, then you don't want to consider that. What I mean by that is if you take a trade right now, you want to watch it close, adjust your stop loss higher, and as you get into profit. So we look at the bigger picture, we can see this descending trend here, this guy right here. That is working against us. We're below the cloud, letting us know that we're not in good shape to take a long position until we're back above that. That's, again, a shorter time frame confirming factor. Lagging span is free and clear, and the conversion lines over the baseline. So we got good momentum. We've broken free from our previous structure, which we can see here, but generally speaking, we still are not back up above the cloud, which is usually like just a tertiary confirming factor that I like to use. So the overall sense here is we're probably going to see a quick run here to the local resistance. These two red lines I have on the chart, 240 and 233, those are previous support levels, and we got to treat them like new resistances. So if this coin comes up to 235 to 240, you either A, secure profits, or you consider a short position. A lot of it hinges on Bitcoin and how it's performing though. If Bitcoin is just monumentally breaking out, doing super well, we're probably going to see a run from this coin too. But I would just highly recommend waiting for a little bit longer to confirm that this short-term trend is broken, and kind of go from there. But the truth is, this market, the way that it is, folks, the longer you wait, the worse it gets. So it sucks, but that's just kind of the way that it goes. Half the reason why my trading bot, for example, quick scalps in and out, is working out very well. Because for one, it doesn't take any emotion into consideration. It's a pre-programmed strategy. But for two, it's more specifically getting in and out within 1% to 2% margins, not trying like a 5% to 10% play or more, which is typically what you look for in swing trades. So to those of you in my community who have been frustrated by this swing trades, while we're averaging still about 70-80% success rate, the amount of success is lower and fewer far between. I've had to close out some trades here and there. It's just not a great market for swing trading. So that's just the reality of it for now. Until the fundamentals slow down and we stop getting nonsensical, tariffs and tweets and stuff from presidents, then we're probably going to see the market continue to do what it's doing right now. Okay, that's kind of where we're at. So strap in, buckle up, whatever the case is, enjoy the ride. It's just, it's weird. it's nothing new, it's nothing new. We're used to this, but it's also very new, and it shouldn't be like this for forever. So there's that too.